Joining us now, it is Ewen Stevenson, CFO for HSBC. Ewen, great to have you with Nera and myself this morning. Can we get a little bit more detail on significant restructuring charges? What scale or quantum are we looking at? What's your best guidance for the market? Good morning.
Morning, Manus. When you look at what we've announced today, I think you can see within the results really a mix of the good and the less good. Within the good, we've done, I think, a very resilient performance in Asia with profits up. But behind that, you also see some significant one-off charges with PPI, for example, here in the UK, and continued underperformance in our non-ring-fenced bank in the US. So the restructuring we're looking at is very much focused on those two businesses together with quite a complex group structure and group cost structure that we've built up over the years. I'm not going to speculate on what that means. I think we intend to come back as part of full year results in February, and we'll have full details then.
Ewen, great to speak to you this morning. In terms of guidance that you might be able to give then, can you give us any guidance on how much you expect the central Project Oak charge will be for the full year?
Look, we've previously guided to that being around $650 to $700 million to produce a similar run rate saving for 2020. I don't think those numbers have changed. But in addition to that, I think what we're signaling today is we do expect some incremental restructuring on top of that, which would result, I think, in some additional severance costs going into 2020.
Ewen, I don't think it's, you've no longer expect to hit the 11% return on equity for 2020. When is it reasonable? Are you still going to stick with that 11% target, and when is it reasonable to expect that you might get there?
Yeah, what's changed over the course of the year, I think, Manus, is a fundamentally different position on a few things. Firstly, the interest rate outlook has changed a lot. From previously, our expectations were that, particularly for the dollar block, we'd see interest rates rising. We now expect them to fall quite materially. Secondly, I think the markets continue to be choppy, which is impacting wholesale banking business, particularly here in Europe. And thirdly, issues like Brexit and some of the issues around Hong Kong, like trade tensions and the current protests, we hadn't anticipated at this point. We do think that we've got parts of the portfolio, particularly here in the UK with the ring-fenced bank and in Asia, that are capable of producing some very, very good returns. So I'm not going to speculate on what our new return targets will be, but we'll be back to the market in February to update you.
Ewen, this morning, Noel Quinn was saying that you're accelerating plans to remodel the underperforming businesses and move capital into higher growth and return opportunities. In terms of accelerating plans with the underperforming businesses, can you give us an update on your progress in selling the French retail bank? How much buyer interest have you attracted?
Look, so far all we've confirmed is the fact that we're doing a strategic review of our French retail business, and there's no update at this point in relation to that review.
Ewen, obviously, from my region, 4% of your global workforce are based in the Middle East, 9,600 employees. We had a story yesterday that we can expect cuts. How much are the job cuts going to be focused here in this region? You've announced this 10,000 jobs to go. So just give us a bit more of an indication geographically. Is that Europe? Is that in the French bank? And what about the Middle East?
The Middle Eastern business, as you can see in today's results, is continuing to perform reasonably well. So I think the bulk of what we're looking at is really centred on three areas. The non-ring-fenced bank, which is a mix of UK wholesale banking in continental Europe, US franchise and some of our group central costs. But the Middle East is going well for us, and we like the business.
How much more will you have to target in terms of asset sales, Ewen, beyond the French retail bank?
It's speculative to say. Some of it may involve just purely running down some of the asset pools we have, not renewing some lending relationships we have where the returns are not producing acceptable returns. I would be surprised if it involves significant asset sales.
Ewen, you touched on a couple of themes. Let's just dig a little bit deeper. We're in week 20 of protests at the heart of your business. Has there been any flow of capital from Hong Kong? Has there been any dislocation from any of the institutions? What can you give us in terms of an insight to the financial underbelly of what's happening on 20 weeks of protests?
Well, it's not just the protest managed. You can also see the impact of the trade dispute too. But everything that you would expect to be impacted has been impacted. Trade numbers are down, tourism's down, hotel occupancy and the like. So far our business has seen very, very modest deposit outflow and some inflow. So overall deposits in the quarter were flat. Lending growth was up. On the credit side, we have taken some additional provisions. The part of the credit portfolio that we're particularly focused on Hong Kong at the moment is the small business end. But overall, we're pretty pleased so far with what we've seen. But obviously, the longer this goes on, the more it will impact our business.
Mm-hmm. I want to come back to the cost cutting as well, Ewen, which of course might also, I guess, be impacted if the protests in Hong Kong go on for longer. It'll be another headwind. When do you think the job reduction programme will be over?
Look, I think any reduction in headcount will very much flow from the restructuring that we do. I would hope in terms of what we're signalling today in relation to the non-ring-fenced bank, the US group central costs, that would typically take a couple of years to restructure. But we will accelerate getting to those plans, and then we'll talk to our people internally before we talk externally.
Ewen, when we look at the various divisions within the bank, where is the greatest and most rapid impact for the bottom line? I mean, you talk about 30% of the bank's capital generating returns of less than 1%. Where is the top objective to restructure in terms of the business divisions?
I mean, I think if you look across the US and the non-ring-fenced bank, you see a few things. About 85% of the capital is invested in global banking and markets and commercial banking. We have a loss-making retail business both in France and the US. So it's a pretty broad-based review that we're doing. So I wouldn't single out any particular area as something that is going to move quicker than others.
Ewen, can you single out any particular areas that might benefit from more investment, the areas that you do see in higher growth and return opportunities? What are those areas that you'll be focusing on the positive side?
Well, you can see in today's results, actually, investment spend this year is up over 10% on the same period last year. We're continuing to invest heavily. I think all parts of our business, we're obviously going through rapid digital transformation at the moment. So overall, we're happy to invest in those areas of the business that are earning great returns. So we've got a lot of investment spend going into Asia, a lot of investment going into our trade platform, mobile platform globally for retail banking. But overall, part of what we're doing today is to enable us to protect investment so that we can continue to invest in areas that are showing good growth, good returns.
Ewen, I want to go back to the guidance that you gave us when I was asking you about the return on equity, and you said, actually, man, it's a multitude of issues, but one of them was obviously on dollar rates. It's Fed week, Ewen, so what's your base case? Is it one more cut and done from the Fed, or what are you modeling? Could you see a world of where rates in the US go to zero?
Look, at the moment, we model what we see in consensus manner, so that doesn't see rates going to zero, but it does see more than one rate cut from here into 2020. Mm-hmm. So we base our forecasts on what we see consensus modeling.
Ewen, if the restructuring that we've talked about at length doesn't bring the fruits that you're expecting, could the dividend be at risk?
I think we've been very clear today that we're intending to sustain the dividend. That's an important feature of our equity story. So no change in the signalling around that today.